Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries all around the world. We also tap our great experts outside of Bloomberg for their take on the market. And we go to one now. Shana Sissel is president and CEO of Banríon Capital Management, and she joins us. So usually January is like one of the best months for inflows, right? Like, do we buy the January effect here?
I don't know if I buy the January effect this year. We also normally get a Santa Claus rally that we didn't get this year either. So I think we have a new administration coming in. There's some uncertainty there. But overall positives for the markets. Inflation, though, remains a headwind. The Fed is more hawkish than they were. So there's certainly some things to be concerned about. But that doesn't mean I wouldn't put money into the market. I'd just be really selective on where I do put money in the market.
So, Shana, Bloomberg News, MLive is out with a survey we do with a third party. People are still buying this Trump trade. I mean, 61% of the respondents feel like risk assets are going to move higher. Is that what you're still hearing from your clients? Is there still that type of trade out there?
Well, I think it's more of a mindset of the last, 15 years, if you think about it. I think we are largely more optimistic because there's an entire generation of investors that don't know what it's like to have a flat to down to volatile market. And there's an expectation that what we've been seeing, which is double-digit returns on average since the financial crisis bottomed. And that, I think, is kind of coloring the expectations of the average investor. I do think that overall the Trump trade is positive for equities, but I do think we need to temper our expectations in the fact that, 20% plus returns of the S&P 500 for multiple years is not normal. And there is going to be a return to normalcy at some point. When that is, I don't know, but there are certainly reasons to think that 2025 could be the year we return to normalcy and, God forbid, get 8 to 10% returns on the S&P 500.
Right. It's like normalcy, but it's not like you're getting negative return or anything. What's interesting is that Fed official Lisa Cook said that AI and private credit are among financial stability risks. That was in a speech earlier this morning. That kind of touches on your area of expertise, right? The alternative landscape. What do you think about that kind of sentence?
Well, AI, I think, is interesting that was thrown in there because that doesn't necessarily impact the capital markets per se. I think it's more the whole, trends around it and all of the FOMO that goes into wanting to be involved with the AI trade. But it's not necessarily specific to how the structure of capital markets work, but private credit is. And I think that's an interesting comment. If you think about the explosion of private credit, it happened during and after the financial crisis as traditional banks became less able and less willing to provide capital to small businesses, to lower credit, that kind of thing. And there was this need for this secondary non-bank financial lending market, which is where private credit kind of exploded. It's always existed, but that's where it really became a much bigger part of overall capital market structure. And the same risks that existed prior to that in terms of lower quality lending, lending to non-traditional types of businesses, things of that nature, those risks still exist, right? And AI is part of that. Crypto is part of that. And when I mean AI and crypto, I don't necessarily mean actual crypto and AI as an investment, but companies related to that, ancillary, that need capital. And so I do think that private credit, because so much money has rushed into it, that tends to push folks to make loans and to provide capital at a higher risk. And so I can see why she would have mentioned private credit.
So CES kicks off in earnest tomorrow out in Las Vegas. And we heard from Dan Ives of Wedbush Securities this morning that, once again, AI is going to be front and center. From your perspective on the alternatives front, do you feel like there's a lot more to go with this AI story? It feels like it's a long-term trend, not a short-term issue at all.
Oh, I agree. It is a long-term trend. But what happens when we have these long-term trends? And let's think about, I know it feels like AI has been all we've talked about for a really long time, but let's think about what the last hottest trend was, where all the money, especially in the private markets like venture capital and private equity, was just throwing money at anything that had the word blockchain or crypto in it. And what happens is all the money runs, and there's people who probably shouldn't have gotten capital, did not have great business models or business plans, but because they had those two really, really important buzzwords in their pitch decks, they were able to capture assets and capital as a result. And then what happens is you find out who the winners and losers are going to be, and there's always things that blow up on you. And I think AI is kind of in that trend right now. And as we get a little bit further into the AI, development, you will see similar things happen there, because so much money ran into it. All the VCs wanted to have anything and anything that had AI associated with it. And there are going to be things that not just don't work, but blow up in spectacular fashion as a result. So I think AI as a trend is a big deal, just like when we had the tech bubble, the same thing. It was a game-changing type of technology, type of trend. But as a result, a lot of money runs after it and goes into bad things.
Shana, always good to get your perspective. Thank you so much. Happy New Year. Shana Sissel, President and CEO of Banríon Capital Management, joining us. So we have a great